Today is the worst trading day of the month. It's the end of January, and I finally tilted and hit over trading and revenge trading. It's the first time this month, and I just want to talk about it. There were some good trade setups. I did very well in the beginning of the day, but when I hit that one last stop loss on the breakout, everything turned around for me. And understanding the psychology and emotions and where I went wrong is very important. If we're going to overcome emotional and psychological issues like that, we have to be able to review this in our lives and take action to prevent it from happening again. So let's take a look at the good, the bad, and the ugly in today's day trading video journal. The problem once you start over trading and revenge trading is to cut it off. The solution is to walk away from the computer, literally, because you can't sit in front of the computer because you're going to think, what if I miss a good trade? The solution is that you might miss a good trade, but you still have to stop. You've already overtraded too long, and you've already broken your rules, and you cannot continue. Continuing is the worst thing, even if you make some of the losses back. That's irrelevant. Because if I take another trade and actually win some of my profits back, the temporary positivity from that is only superficial, because the bigger picture is that I still continue to trade against my rules, and that's the bigger problem. So to win right now, to win out of this situation, to cut my losses and to make a positive turnaround, I'm going to have to take the losses and understand that by not taking another trade, I'm actually doing something positive about this problem. All right, so that's the solution to this. But let's continue to observe all the trades now, all the trades from the beginning to the end. All right, we got the opening bell. Tesla look all marked out. Here's the hourly chart. Nice little breakout attempt here, and actually has broke out to all-time highs here. And what we're trying to do is, it's not over the pre-market high yet. So it is poking over the all-time highs here. So it's the pre-market area I'm still looking to be careful with, because it could show us signs of coming down. Here's the pre-market high. Even though it's hit the all-time highs, it's not over that yet. So I'm a little concerned. I'm not taking a trade over the first 2-minute candle right now. First 2-minute candle did close in a pintail here, it looks like. And now it's popping right over the top of it. And I can understand why people would want to take that trade. It's hitting all-time highs, and it's going right for the gusto. I'm just not sure if I want to take it. And it's a strong move, and I don't blame people if they did. But the pre-market highs could be an area. I want to see it break the pre-market highs, consolidate, and push up over the top, not test it or not break through it. I don't want to take a trade if it barely goes through it or whatever. I want it to really show me evidence that it wants to go. That's my plan today, is I need more evidence on my trades. Okay, what we have with Tesla here, gapping up and coming back down. Let's see, the pre-market levels are right here. It has tested the low of the pre-market levels and came right back up. The hourly chart, it's got plenty of room to come back down to test yesterday's close. It's a downtrend. It's up in the gap area. I mean, we probably should draw Fibonacci on that to see where it's at in terms of how high it's popping up. It's popping up right to 50%. So it's very possible we should be looking for a way to short this. If Tesla were to try to break this pre-market low, come down and consolidate and push down, that would be a short for me. So until it does that, if it stays in the middle here, I can't do anything. Okay, we're looking at NVDA, and it's still in that range below the pre-market high. And we've got the 5-minute range developed now. We got the high and low of the 5-minute range. So if it were to come down here to yesterday's close, yesterday's pivots, and do something, we could have a chance for a trade there. If it gets over the top of this range and consolidates and pushes, if it gets below this range, consolidates and pushes, any kind of consolidation pattern, breakout pattern with consolidation is the trade for the range like that. All right, and it may, let's see what it's looking for. We got an alarm on Tesla. Let's see what Tesla's doing. Tesla is trying to come back down. Looks like it broke the pre-market levels. Yep, it broke the pre-market level here, and it's pushing down. Unfortunately, I got to go check and see what the 2-minute chart's looking like. Here we go. Yep, it's coming. It's going down to the close of yesterday. Looks like on the 5-minute chart here at the 50% range. Could have had a short ready. Um, it's breaking down below the first 5 minutes, and so that candle would have been a good entry, to be honest with you. That candle would have been a good entry right here. It still may come up and give us a chance to get in it. That candle right there, because the wick is very short, you use the top of that wick as an entry. Let's see if it comes up and gives us a chance. 5-minute range here on the 5-minute candle. It breaks the 5-minute candle. Okay, see, now it's come back up, and it could give us a chance to reshort that here. We could short that and try to use the top of that candle as... Okay, what I've done is we shorted, it came back up and gave us a chance to short, so we did, and we got entered in on this 192.91. So our target for 1-to-1 is down here at 192.16. Our stop loss is 193.66 above that wick of that candle, like we said. So let's hope that we get a 1-to-1 on this at least. And if it comes down, if it goes up to the top to stop us, then it stops us, but it's worth a try. We'll give it a try. All right, I'm just going to show the orders. We got 2 stop losses up here in case our 2 shares goes up back up there. Here's the target to buy, get out of one of them. And this is a short. So we'll buy to close right here. It almost hit the target. Basically what I do in this case is I take one of them and break even because it basically hit 1-to-1. So I don't want to lose any money on that. It almost hit 1-to-1 a tick away. So I'm going to break. Okay, we break even on that one. That way we're not losing any money on it if it comes all the way back to the top. Once something hits 1-to-1, I try to break even on, at least some of that. Okay, and if it goes down and hits our target after that, then fine, we got a profit on some of it. But if it were to go all the way up after coming to 1-to-1, I don't want it to stop me out for the full measure of everything. So I try to break even on some of that. So it just means that, you won't make as much profit if it does go down. Now, if it also goes up to stop out, then we won't have as big a loss either. It also means that if it goes back up to the top, we won't have much of a loss either. It's kind of a win-win situation. So break even on half. If it doesn't continue down like we're thinking, and it comes up to stop us out, then we stopped out at only half of the position. Or we took a full risk loss on only half of it. Okay, so far I'm entering for this particular trade. I've moved my target down a little bit also because we could use this pivot as our stop loss now if it keeps going. Drag down our stop loss, cut some of the risk out. Broke even on some of it. It almost got our first target, but now I'm not satisfied with the first target because it came down. If it breaks right here, I'm going to make it go down to this pivot of the day. There's some kind of a low of yesterday, high of yesterday pivot. It's important. Here's the close of yesterday. It can still go to. Yeah, I'm going to make it come down further is all I'm saying. And that way, try to make up for having to stop out on some of that. NVDA is still inside the 5-minute range. Looks like it wants to push down below, but there's some obstacles here. It may just come down and go into the close of yesterday and come back up. That would be an interesting trade to take if it does that. Here's the hourly chart on that idea. Come down, hit the close of yesterday, reverse, and go right back up. I wouldn't blame anybody for taking that trade. It probably will have some reaction in that area. Is it enough for a scalp? If you're quick with your fingers, it would be a very interesting idea. I think it's worth somebody taking that trade. I might try to take that trade myself. Let's see what happens. I was waiting for NVIDIA to come down and poke into this area here and probably just buy with a set mark of stop loss risk. Just if it keeps going, then get out. Have it all marked into my risk reward. But it never came down that low. It still might. Over here on the 15-minute chart using the pre-market levels and everything, you got some pretty interesting weakness. All right, so let's see how that keeps developing. But if it does go down into the close of yesterday, I would not be surprised if we don't have an initial spring back up. So a 1-to-1 reward or 1-to-1 risk ratio on that would be an interesting quick scalp trade for me. I'd like to try that. We stopped out on Tesla, which is perfectly fine. cancel our orders, and that was worth a try. It was worth a try. On the hourly chart, it hit 50%. We're looking for weakness, and on the 5-minute, 15-minute chart, we've got a big red candle, right? The first 5 minutes was a big red candle. We have the 5-minute range, and it broke down below that range, and it started to push. We got a really small stop loss. We broke even on half of the trade because it didn't quite go to the target. We almost got it. I just broke. And so we lost on that trade only half with a full risk. And that was fine with me. I would take that trade. I would take that trade again because we had multiple variables. We had a 50% retracement from the gap down. We had a big red candle and on the 5-minute chart, a break of that candle, plenty of room to go down to the close of the previous day, and it still may get there. It still may get there. That may just been a little early on the trade. It may still continue to go in that direction. We may see it end up going down to the close of yesterday after all, but the first attempt here did not work. Now, if we were to draw Fibonacci from today's opening down here, we're looking at a 50% pullback right now to still head to the downside. If I was aggressive, I could take a short on it right now and begin to see if it will continue down, but I'm not going to do it again at this point. I'm not going to do it again right now. So we'll wait. Let's see what the 1-minute chart's showing us here. 1-minute chart, 5-minute range, Fibonacci drawn. I guess we could use the high of that pre-market there. You can see it's right in the 50% range going down. I don't see why not shorting this would be a bad idea. I really don't. I think it's a possibility to short this. I don't want to take too many trades too early, too quickly when I'm losing. I really would like to see it try to get up here into these pintails maybe. That's where the weakness is. It looks like from the day anyway. If it pushes up into that area, into the 60% retracement area, puts in a pintail up there maybe. Now if it's trending lower, it ain't going to get there. These are going to be the pintails for the short up in this area, but it's still within the 5-minute range, and it's pulled back into the lower end of the 5-minute range. So I'm still looking to short this. I really am, but you got a pretty strong bullish move on the 5-minute chart. It's become bullish on the 15-minute chart. The 5-minute chart's pretty bullish here. If it was a lot weaker, I might, but I'm tempted to short it here, but I know better because it's still within the 5-minute range. It's a little choppy, doji looking day. Look at the activity on the 15-minute chart. The first 15 minutes is a complete doji, whippy, choppy, up and down, ended up in the middle. And even this next 15 minutes, it went down and come up 50%. Very choppy. Pre-market pulled down in that area and popped right back up. I still think it's going to get into the close of yesterday, and I'm looking to take a trade on the close of yesterday and have it pop back through, pop back up. So that's the trade I'm hoping for. Okay, I like this pattern on NVDA. I mean, look how beautiful it looks on the 5-minute chart. Okay, it's starting to push back up, holding the highs, the pre-all-time highs. Didn't quite come down to the close of yesterday. It's showing a lot of strength. We have a 2 try to sell pattern here. If it can consolidate, it could be the consolidation we're looking for. It's very small though. I'm looking for it to consolidate over here. There's a consolidation candle. And if it pushes up, we can use the low of that consolidation candle or the low of this as a stop loss. So I'm looking to take a trade here long on NVDA. Okay, I have a buy order right here at the moving averages. I want it to come get me though, so I get a better price. It's kind of using this trend line area as a guide to where it could potentially come down to. And maybe I'm a little bit too high or too low. Let's see what happens here. If it triggers me in, we'll use the bottom of this big wick this big candle here as our stop loss down here in this area. And we may not get a lower price, which means I'm going to have to buy it up higher. Okay, I got in before this little candle breakout here. I just didn't want to miss the trade. I figured it's worth the risk. The patterns are looking good. The market's holding up. You can't really always get a perfect entry, but my stop loss is underneath this big candle consolidation here. All right, my target's right up here. That's a 1-to-1. As soon as it gets near that target, I'll break even, and hopefully it'll hit our target. That would be great. Let's see if it's going to have to make all-time highs here. And to do that, it looks like, because this is where it got weak earlier, but it's going right back up into that area. I could use that as my target zone, but that's not enough for the risk, actually. So I may be trailing my stop up higher. As it gets higher, I'll pull my stop up higher and see what happens. We'll see how this works out. One thing I'm learning is that even if I take a loss, I have to hold for my target. I have to hold for my target. I have to develop patience. And if I could do that, I'll be ready for the next level. So thank God for developing patience, having a good plan, having a good setup. And if it doesn't work, you did everything right, it just didn't work. And that's going to happen sometimes. But you got to hold for the targets. There's no doubt about that. Something I've got to train my psychology in is to be happy that I found a good trade setup. Not be happy whether it wins or not, but be happy that I found a good trade setup. Because if I find good trade setups, then eventually it will be profitable. So even if the good trade setups fail, be happy that you found a good trade setup. Okay, right now it's breaking out of the high of highs, all-time highs, breaking out of the 5-minute range high for this day. This day is all-time high day on NVIDIA. All it's got to do is go up a little bit more to hit my target. And at this point, I should probably bring my stop loss up a little bit just to cut some of the losses. So let me do that. Okay, I lifted my stop loss up a little bit. Not too much, but a little bit. Keep it far enough away. I drew a Fibonacci from this pivot all the way up to the high that it's at, and 50% pullback is right at this pivot level. So I don't really, it could drop down to 60. I want to keep it under 60%, because if it were to do a pullback here, I don't want to be too close. All right, it's almost at my target. I should probably be coming up higher on my stop loss. I will pull my stop loss up to break even here shortly. I just want to make sure it's getting closer and closer to the target. The target's right here at this price range right here. It's almost there, about 634.18. Hopefully it'll get it. It's very grueling to be patient and wait for your target to get hit, because if it doesn't get hit, it can be disappointing. There's a psychological head game that's played, and it's going to happen from time to time. It will happen from time to time, and you're so eager to just pull that trigger and get out early. The best way I can counter this is just to bring my stop loss up, and right now it's so close to break even that I will bring my stop loss to break even. That way my risk is off the table at least. Okay, now we're at break even on our trade, and because it almost came to hit my target. I hope that it remains going up and doesn't come all the way down and stop me out for zero, but that's the way it goes sometimes. If that's the case, I am glad I found a good trade setup, and I am glad that I waited till it almost hit first target to come down to break even. I don't like it if it stops me out for break even, but this is the rules that I have, and this is the rules that I follow. Got to follow the rules. Okay, price is about to hit the first target, but what I did was I raised my stop loss up into profitable territory. I'm going to see if it hits first target, I can close my position if I want, but these candles are so bullish that I'm going to try to see if I can just trail here, and if I can trail here, I'll keep moving my target up higher. So right now, at the very least, I'm profitable some. If it keeps going, we'll trail the bottom. And if it keeps going to hit targets up above, that'll be better profits. So I think that's a smart way to play this. Something that's a clue is, well, is the 8 exponential moving average seems to be keeping it up. It's really having some trouble right here getting through this area, but it's very tempting just to take my profits right now because it's taking so long to break through. But it is making higher lows, higher lows, and it is holding on the 8 exponential moving average. If I take it now, it's going to be it's going to be psychologically damaging because it hasn't hit first target yet. It's almost there. And I cannot allow myself to get out a little too early, especially when it's holding the 8 EMA and it's putting in pintails. Now, if it slams down and stops me out, there's nothing you can do about that. But the evidence is showing us that it wants to go through that level, so I cannot possibly take it off early right now, especially since I'm already break even to slightly profitable on the trade. There's no way I can close this early now. We'll see if that was good or not. I did close it early. I know I just said it was not a good idea and I could have made a mistake, but over here on the 5-minute chart, it looked like it was starting to roll over. And boy, oh boy, I'm going to be kicking myself if it ends up being a bad decision. And on the 60-minute chart, it was falling below the first level, the first hour. If it was above the first hour pivot here, I probably wouldn't have done that. But it started falling below, so I didn't want to take a chance on losing everything. You see how it's below that wick? It started falling. It can go right above it again, and it certainly might. There might be another play here for the breakout, a breakout play here though. And I just hate that I might have been hasty on that and made a bad decision. It's almost better to take a loss than to have you get out early and make a hasty decision like that. I really don't want it to close below the 20 moving average. Trying to figure out what to do here. I got my stop in place. I re-entered the trade. Even if I didn't re-enter the trade, I'd still be in the first trade and it's pulling back. So I figured let me get back in it and let the trade play out. The stop loss, I moved up to this pivot area. So if it pulls back, that's where the stop loss is. And we'll be done with the trade. Probably trading today. We'll just analyze the trades that we took and see where the errors were and try to improve for tomorrow. All right, I was stopped out in NVDA. Let's take a look at what happened here. Came down to my stop loss, this structure where it was 50% pullback. I was really hating to put my stop at a 50% pullback. Or actually it was at 62% pullback, which is a great place to buy, really. And even if I held this position, if I kept my stop all the way down here and didn't raise my stop and take off some of the risk, then I would be still in this first trade. I'm going to make a note of that. I re-entered the trade and it came down and stopped me out. If I was still in the first trade, my stop was down here. So I want to take a note of that and to see what happens in the big picture of this trade. Okay, I went on tilt and overtraded massively today. Revenge trading and all that good stuff. This is my last trade. In fact, I'm going to turn off the computer. I think that's the only way to stop. I'm up to my 10th trade. Instead of taking 2 or 3 good trades, I'm up to my 10th trade. And I had a massive loss on that breakout trade at lunchtime. Complete and total loss. And then I've been trying to revenge trade and make it up for it ever since. And I know better than this, but it's hard when you're in the mix of it. When you're right in the middle of it, the only thing you can do is turn off the computer and get out of the house or walk away from the desk. And if this trade does not work, that's what I have to do. I have to do that because I'm trying for a trend line break trade. It's a reasonable trade. It tested the low of the day of yesterday's close and came right back up out of yesterday's close, and it broke a trend line, and now it's trying to get up over these moving averages. And I suppose my stop could be back down here at the under the low of the day, but I'm sorry, over the close of yesterday. But I'm going to get out. I really want to just get out of this trade now, and I want to shut this thing down. I don't even want to look at it. So here's the 10th and final trade, stop loss. And I've got to really be honest about this video journal that I'm making here on YouTube, because if I don't conquer this, this is going to eat me alive. Fortunately, it hasn't been a big loss today. It really could have been, but little tiny positions and trying trades and all the losses added up together are really not that much. But that's a reason why to keep doing it, I guess, you know, and that's not good. So after this trade, I'm going to shut this thing down for sure. Just to catch up and wrap everything up, this is the end. We took several more trades after that, and one of them was barely profitable. But after that, yeah, after that last short there, I tried to short it. I tried to go long. I tried to go short, and then I went long, and it profited up to one target, but I didn't take it because I wanted to make back more. I should have took my one profit, and I stopped out with a little bit of profit on that after all these reckless trades that I made, starting with this gigantic trade, this gigantic breakout up here that did not go through. I literally took it on the red candle coming back to test the breakout, but it didn't test it properly. And then this pin tail, I didn't have enough sense to get out after this pin tail was there, and it continued down. This is the area I should have gotten out right here. 1, 2, 3, 4 candles after the breakout is enough to tell me that, hey, it's not going to work. All right. So I need to really document that. But that's all the losing trades, and where I went wrong was with this breakout trade. Up until then, things were reasonably managed. Good trades were picked. Stop losses were in place, and everything was going according to my trading plan until this loss right here. So this is the pivotal moment today that I need to focus on in my meditations and study.